Ghester, Monday 30 October 2017. More on Lock PSN image. Persimmon. Fair use house builders have been one of the great investment plays since the 200809 recession, delivering huge rises in share prices and masses of dividends. However, house building is a highly cyclical boom and bust industry, and current valuations suggest to me that it's time to be fearful when others are greedy. The table below shows some data at annual results dates for FTSE 100 house builder Persimmon LSE PSN going back to the years before the last crash. As you can see, before the last housing crash, Persimmon was posting record profits, operating margins were in the cyclically high 20s and pays were temptingly undemanding. But house builders have been one of the great investment plays since the 200809 recession, delivering huge rises in share prices and masses of dividends. However, house building is a highly cyclical boom and bust industry, and current valuations suggest to me that it's time to be fearful when others are greedy. The table below shows some data at annual results dates for FTSE 100 house builder Persimmon LSE PSN going back to the years before the last crash. Market cap £BN, book value £BN, net profit £MPBP, operating margin %, share price P2,722,017, 6.26, 2.74, 625, 2.3, 10.025, 2032,322,016, 6.24, 2.46, 522, 2.5, 12.022, 2029, 2,422,015, 5.06, 2.19, 372, 2.3, 13.6, 18, 1,652,522,014, 4.46, 2.05, 257, 2.2, 17.4, 16, 1,463, 2,522,013, 2.72, 1.99, 171.4, 16.013, 898, 2822001, 22.13, 1.84, 109, 1.2, 19.510, 705, 013201, 1.36, 1.74, 115, 0.8, 11.88, 452, 023201, 1.28, 1.62, 74, 0.8, 17.34, 424, 033200, 9, 1.13, 1.56, 625, 0.7, na 11, 375, 26220008, 2.28, 2.35, 414, 1.05.522, 760, 262200, 74.41, 1.84, 396, 2.4, 11.1, 21, 1,473, 2,722,006, 4.17, 1.69, 345, 2.5, 12.1, 23, 1,416. As you can see, before the last housing crash, Persimmon was posting record profits, operating margins were in the cyclically high 20s and pays were temptingly undemanding. But the share price had almost halved, even as it was reporting a record net profit of £414 million in February 2008. And halved again by the time it reported a £625 million loss a year later. As you can also see, the ideal time in the cycle to buy is when operating margins and profits are depressed, pays are high or off the scale, as at the time of the £625 million loss, and PBs are below 1, indicating a discount to net assets. However, we're now back to top of the cycle, operating margins in the 20s, record profits, undemanding pays but high PBs. In fact, at today's share price of 2,800p and incorporating H1 numbers, the operating margin is 28% and the PB is 3.2, unprecedented highs. I don't believe it's different this time. And with UK personal borrowing at its highest level in history, interest rates set to rise, and house prices already falling in London, I see substantial downside risk. As such, I think the time has come to switch to rating Persimmon a sell. Lock a stock I'd buy. Am more optimistic about the valuation and prospects of UK self-storage specialist LOKN Store LSE Lock, which released results today for its financial year ended the 31st of July. The shares are up 2% at 370p, giving this AIM-listed company a market cap of £108.5 million. With the company having posted a net profit of £3.1 million, the P is 35 and an 11% increase in the dividend gives a yield of 2.7%. Meanwhile, its book value at year-end was £89.1 million, so the PB is 1.2, or 1.1, adjusting for the fair value of the leasehold portion of its property estate. LOKN Store's self-storage facilities are used by household and business customers. It also has a revenue stream from serviced archive and records management, and an income from managing self-storage units for third parties. It reckons the attractive dynamics in its market include being resilient through economic downturns. It said today that its expanded new store pipeline will add 45% more space over the coming years. It added that this creates a strong platform for an exciting period of rapid growth. Based on its modest PB and prospects of rapid growth, including growth in book value, I rate LOKN Store a buy. It's not always easy to decide when a stock is sufficiently overvalued to make selling it the best course of action. But is selling too early one of the most common wealth-sapping missteps investors make? You can find out the answer to that question, because the Motley Fool's experts have published a free report called The Worst Mistakes Investors Make. This essential free guide won't cost you a penny, but could save you hundreds of thousands of pounds. Simply click here for your copy. G.A. Chester has no position in any of the shares mentioned. The Motley Fool UK has no position in any of the shares mentioned. Views expressed on the companies mentioned in this article are those of the writer, and therefore may differ from the official recommendations we make in our subscription services such as Share Advisor, Hidden Winners and Pro. Here at the Motley Fool we believe that considering a diverse range of insights makes us better investors.